For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
One of the things that came up last Friday is on the SPX, we broke a support level intraday, and the market came back and it traded higher again. That's not uncommon, but one of the things that happened is somebody is questioning whether they should make this intraday adjustment or so forth. And I kind of want to talk about that a little bit. There's a reason why I have people wait to the end of the day to make adjustments, particularly in the Go membership, right? So our suggestion is on our trades is you would ignore the intraday movement. We come in at some sort of a checkpoint time. I mean, on all our sample trades, we do half an hour before market close. It doesn't have to be exactly that time. Of course, if you want to match me, then you would have to be exactly at that time. But the reality is we can do this at different times. The reason we do that is because there's a underlying assumption that if you're trading non-subjectively, that you really don't understand the market movement. Because if you really understood the market movement, why would you trade non-subjectively? Because there's so many advantages to having an understanding of what the probabilities of price movement ranges are, and then playing those ranges. It's a huge, huge advantage to that. And if you did understand that, then you have the education and you can, I mean, you trade based on the information that you have, right? So this is a good example of why this day here, Friday, is a good example of why we might tend to wait to the end of the day if people don't understand what's going on. If you do choose to make these intraday adjustments, then you're doing so on a information based in a different time frame. So by that I mean is realistically from a decision standpoint, if we're on the daily chart, we should wait till the bar closes in order to decide what that means. Like if I can break a support level by a lot intraday and have that market turn around, come back and actually close higher than it opened, like we did here, by the end of the day. The challenge is if I'm doing an intraday decision here and I come in here and I adjust this thing down and flat because it broke a support level, and then it comes back at the end of the day and now it closes bullish again, like we did in SPX. And my plan is to sit there and wait until I hit a upside adjustment trigger. That's going to be problematic for me because I adjusted down here. A lot of times the trader is going to adjust down in a panic, so their execution pricing isn't going to be very good. The end of the day comes and it closes bullish, right? This is on a short-term chart. This is like a 2B reversal almost in some time frames, and that tends to be very bullish. So now I'm in a situation where I've adjusted my trade neutral or maybe even bearish, and the daily chart is very bullish. And the probable move or the highly probable move is that we're going up, but probably fairly quickly. And now you're going to sit there and wait until you hit a negative adjustment point, and by then, you know, it's going to be hard to recover. So when we're doing these types of moves, if I'm going to make a decision to adjust this intraday, I need to shift down to an appropriate chart to know when to reverse out of that. Again, underlying context is, hey, on the daily, I broke a support level. That is bearish. And it's intraday, the bar hasn't closed yet, but I choose to make an advance and make that move. Making the move or not making the move isn't necessarily a right or wrong decision. You can do either. It depends on what you're going to do. But if you're going to make that intraday decision, you want to do so on the right time frame. If I make the decision with the breakdown intraday, then I don't want to sit here on a daily chart and I don't want to sit in my position until I hit the other side. I want to get down into a time frame. If I'm making intraday decisions, I'm not doing it on a daily chart. Realistically, I'm doing it maybe on, say, an hourly chart would even be, intraday would even be a little bit aggressive. I'd probably be on a 15-minute chart or maybe a 5-minute chart, right? So if I get my 5-minute chart out here and, let's say that, right, this was the day before, we bounced up, we came down, we broke this level. We broke this swing low, right? So I make a decision, say, let me get some drawing tools. I make a decision, say, right here to say, you know what? I'm going to make an intraday adjustment because I broke my support level. Okay, fine, right? I don't necessarily have a problem with that. But from there, we want to get down, drill down into the short-term charts and use our technical understandings to know when the market's going to reverse. And I would argue that the market reversed as soon as, right? So I have this base trend line to the downside, right? And I'm going here. As you know, well, if as anybody knows who's been here for a while, what I'm like is, oh, this is my first warning sign that I might be reversing. But it's early. Now I see my trend slowing down. I actually, if I'm intraday and I'm in here, I'm kind of looking here, right? Because this slowed down. I could also, there's multiple ways to do this, right? There's no right and wrong, but the important part is I notice the market's getting stronger, right? I come here and that's my next swing high, and then that kind of holds, and then it kind of runs sideways, right? So I'm just kind of watching this, and then it breaks down and holds under a certain trend line. And then we get a bottoming candle, and then we get a break of trend line, and then we have another trend line, we get another break of trend line. Somewhere around here, I'm thinking that the market's probably is a good chance it's reversing. I like to see it clear a horizontal level on some time frame, and I could if I wanted to get it a little bit earlier, I could push down to a smaller time frame. But by the time I'm here, okay, and I want to mark these out for you so you see them. I have a swing low, right? I have a breakdown of that swing low. I have the consolidation right in here. I have a breakout of that consolidation. This is a fairly strong signal that the market is at least going to come and try and retest either this high or this low right in here. If I made this intraday adjustment, I'm thinking about, or maybe I even will back out of it here, right? Again, because I've chosen to trade intraday all of a sudden. I'm probably going to back out of it. You guys know I back out of stuff really early. So I'd probably back out of it here. And then if I get a failure at this point, then I might go back into the other side. So I might be like, okay, fine, adjust down, back out of my adjustment in through here. And then if it comes in, go back into my adjustment again, right? So I have to be fluid based on the time frame that I have, right? If I was treating this like a daily chart, it's a lot easier. So here, I would be bullish as early as here, but by the time I get here, right, I cleared this level. Again, this is bullish. I pulled back a little bit, but I didn't break my short-term areas here. But by the time I get like here, this is full on out, the market's going up. So if I make, my point being, if I make this down adjustment, I don't want to do it if I don't understand technicals. And I'm jumping in because I'm afraid that the support level broke. That is, again, the execution can be really bad for you here, especially if you're panicking. If I'm going to adjust down, I'd probably rather do it maybe here when we get a little bit of stability. Let me clear this out. I'd probably rather do it here when we get a little bit of stability. I could maybe make my down adjustment there if I wanted to do that intraday. And then again, if I'm shifting to the intraday time frame, I'm looking for a reason to back out of it. No reason. Oh, here's a reason to maybe back out of it. Notice I probably made money or broke even on this because I'm adjusting down here, I'm adjusting back up here. Again, it depends on your execution and exactly what you're doing and so forth like that. But I'm doing that at the very least. This is a potential adjustment, and at the worst case scenario, I should be adjusting back up here. I shouldn't be adjusting, when the market gets way up here, because, now I switch to a short-term time frame to make my down decision, and now I'm making my back up decision on my long-term time frame. When you start switching time frames against your benefit, then it's going to be problematic. Okay, so I just kind of wanted to discuss that a little bit, and talk to you about making the intradays. I mean, if you guys understand the market movement, by all means, you're in front of your computer, by all means, make your smart decisions on your computer and based on your price movement and do your intraday moves. But if you don't understand them, then just wait and see how the daily bar closes and run from there. as you become more and more proficient as a trader, if you're going to start to make these intraday adjustments, again, the only reason I tell people, well, there's two reasons I tell people not to pay attention to intraday. Number one is because I don't know, it's not going to be healthful for most people to watch the market all day unless they're day trading. I mean, it's all it does is cause stress in your life, and it's a pain in the neck. But there are going to be times when you're going to want to watch your trades. If you are at a higher level, you'll want to do that. But that's number one. Number two is if you're making intraday decisions, you're probably always going to get crappy execution, right? So if I'm trying to force a down adjustment as the market's breaking down, that's going to be a hard to fill, and pricing's probably going to be really against me, and I'm generally not going to want to do that. If I just wait till the end of the day, then it's random at whether the market's breaking down or not. Sometimes you might hit it breaking down, sometimes you might hit it when it's going in your direction, and execution's going to be really easy. Sometimes it's going to be relatively neutral. My point being is I'm trying to help traders avoid forcing their adjustments while the market's pushing down. It's generally not beneficial for anybody. So those are the two main reasons. But if you get to the point where you understand intraday price movement and you're going to shift into the appropriate time frame, and you're going to make the decision, right? So a lot of times I'll make the decision that I want to adjust this down, and now I'm waiting for an opportunity to do so very efficiently. Maybe I want to adjust down, but I'm waiting intraday for the bounce, and I know intraday how far that bounce is likely to be. And then at that point, I know I'm going to get my best pricing, right? I'm not necessarily going to get mid pricing. I don't really care what mid price is. I mean, that's really almost the least relevant thing when I'm thinking about execution. I'm looking at the charting, and I'm like, well, I'm in here. It's like, well, I know if I'm going to adjust down, right? If I've decided to adjust down here, because say this broke down this day here, and I know I want to adjust down, I want to do it here at my resistance level. I want to adjust down on my resistance level, and I'm not that worried about mid price because I know I'm going to get my best pricing there. If they're giving me a hard time on mid price, it's because they know the market's going down also, but I'm still going to get my best pricing there. If I'm trying to adjust down here, this is like my worst pricing I can get. Okay, and then of course, if I'm trying to adjust up here, that's the worst pricing I can get. So I want to avoid those levels if I can. Sometimes I can't. Sometimes I'm in a position and really I have this risk problem. I got to make the trade, and I just have to suck it up and do it. But I want to avoid that whenever I can, and we can do that if we can break down into our lower time frames and switch in and out when it's more appropriate. All right, so with that, I'm gonna let you guys go. Thanks, everybody.